a retired person.
Okay.
I have a
You
daughter.
have 5 crores in PF right now,
Yeah,
and you're
yeah,
getting
I have
8.5
5 crore in
interest every
PF.
year. Got it. Yeah.
Yeah, I will get for another year 8.5% interest. So I just
Okay.
wondering whether I should keep it there or take it out and then go for alternative investments in a manner that it would secure steady cash flow for my daughter in future.
Got it. Got it. So, Mr. Ramki, what I'm able to understand is you are not ready to take risk with this corpus that you have accumulated, and this is also not the amount from which you will need money for your regular income. This is purely the amount that you would want to give your daughter for her future security, right?
Yeah, you have and invest through in investment. I want to invest it and then give it to her.
All right. Sure. All right.
Yeah,
So,
my idea is
it,
to
it
have capital appreciation as well as steady cash flows also.
All right, so you need cash flow also from this amount, and that would be how much per month if I have to accumulate or calculate?
Uh, so let us say uh, 2 lakhs a month.
2 lakhs a month from this particular amount that you would like to withdraw. All right. Have
Yeah.
you ever participated in any other investment instrument apart from fixed deposits, PPF, PF? Have you ever been to the debt side of mutual funds?
Yeah, debt not much. I have maybe 2-3 lakhs of debt instruments, and then
Okay,
I also have exposure in equities to about a crore, which are
sure.
already
Okay.
invested, and then yeah,
Okay. Okay. But with this money, you won't be ready to get an exposure in equity, right?
no, I would be ready. I'm
You
open
would
to
be
any
ready?
avenue.
Okay,
Yeah.
okay, okay, okay. All right, so let's explore more on this and let's ask Amol if any balanced strategy could be recommended over here. So, Amol, a lot of clarity on the question already.
Sure.
He cannot take much risk because 2 lakhs per month is the amount that he's looking for as regular income from the corpus of 5 crores he has accumulated. So, capital protection and cash flow is the first two things, and then
Right.
obviously he wants to create wealth to pass it on to his daughter as well. So, and he's okay with equity. Although I'm not sure
Sure.
about how aggressive, but then maybe a balanced approach can help. So, what should be the strategy for him? What would you recommend?
Right. The two, three questions that Mr. Ramki has shared with us are the very first question is, do you think I should continue or I should withdraw and switch to alternate investments? So let me answer that question first. Looking at not just market levels, but market valuations as well, I would advise Mr. Ramki to take staggered approach. So even if, so do not be in hurry purely looking at current market levels or last 1 year, 2 year returns. I think you should take your time and you have a decent time in your hands of 1 year. So I would say take the staggered approach of investments. That's point number one. Point number two, given that you want capital appreciation as well as some cash flow, if I just do a rough back of the envelope calculations, your 2 lakh rupee per month actually becomes a 24-25 lakh rupees per annum. That is about 5% of your capital. So if your investment is able to make 8-9% sort of a return, this is not by not taking excessive risk. So you can probably look at into investing into balance advantage or hybrid strategies. If you get opportunity from the market in an event there is a sizable correction, then you can look at large and mid cap and flexi cap schemes. Coming to schemes, this is the third part. I would say in the hybrid category or balance advantage category, you can look at ICICI Prudential Balance Advantage Fund. In the flexi cap category, you can look at Parag Parikh Flexi Cap Fund. And in the large and mid cap, you can probably choose to invest in HDFC Large and Mid Cap Fund.
All right, so that's the word coming in from Amol. Mr. Ramki, is there anything else that you would want to ask?
Thank you. Thanks a lot for that. But apart from this, what you say, mutual fund route,
Right.
how much proportion can I allocate for direct equity exposure? I already told that I have a crore of exposure to equity, direct equity. So
Right.
can I allocate more for equities.
Sir,
From
that
this
also
5 crores
depends.
or so.
Sir, that also depends a lot on your risk appetite. You know, you can have as much exposure as you want in direct equity, but then it should also be a level with which you are comfortable. So, Amol, is there any thumb rule that one should be sticking with?
Okay, so my thumb rule over here is, Mr. Ramki, this corpus is for your daughter's all the future requirements. So as of till such time that you are able to manage and handle that portfolio, you can probably look at investing about 40% of the corpus into direct equities. But mind you, mutual fund investments probably is best way for somebody who does not want to take the headache or does not have the required time or expertise, or even, let me use the word, passion to manage the direct equity portfolio.
Let's move on and let's connect with Girish from Pune. Hi Girish, good evening. How are you doing?
Very good. Thank you very much.
Thank you so much, Girish, for sending us your question. And all right, so you want to understand if a multi-asset fund is better than a flexi cap one, and you also want to know if there is any reallocation strategy that needs to be adopted as far as your exposure in mid cap and small cap is concerned. You want to understand if it's the right time to shift to large caps, and you have a question on PMS of White Oak.
Yes, White Oak and Marcellus, CCP.
Marcellus,
And,
okay,
Giant.
sure.
Yeah.
Sure. Okay, so let's address these questions one by one. Amol, let's just start with the most common question, and I think that will be of having rebalance in your portfolio. If at all you're someone who's heavily exposed in mid cap and small cap, time to shift towards heavily in large cap.
Right. Depending on your time of entry, mid caps and small caps have delivered anywhere between 30 to 50% kind of CAGR over last 1 year, 2 years, some of the schemes over last 3 years as well. So, Girish, you are absolutely right. If the question comes to your mind whether this is the right time to rebalance, I would certainly side with you. This is right time to rebalance. Most of the times people are aware about the rebalancing between various asset classes, that is from debt to equity, equity to debt, depending on portfolio size and your risk appetite. But within equity also, you can have an asset allocation. Small cap funds are very well known to have extended periods of higher drawdowns and extended periods of flattish or even negative returns. Compared to that, large caps are slightly better in terms of kind of the kind of risk that you would want to take. So I would suggest, if you theoretically, I'm not sure what's the kind of exposure that you started with, but if you started with a 50% exposure to large cap and 30 and 20 to mid and small cap, that exposure would have certainly got skewed because of higher mid and small cap return. So I would say yes, rebalancing is certainly in order. That's about the first question. Second question about, you have asked about comparison between flexi cap and multi-asset funds. So right off the bat, Girish, I would say that this is not the right, two schemes are not strictly comparable. Flexi cap scheme is an out and out equity allocation. It probably invests 95 to 100%, all is invested into direct equity at all points in time. And on the other hand, multi-asset, as the name itself, suggests, it has multiple assets in it. It certainly has equity, it has debt, it has gold or silver, that is precious metal allocation. And some of the multi-asset schemes also have international equities. So I would say these two are strictly not comparable. So I wouldn't go there, or I wouldn't give my verdict. But I would certainly say that you want to create long-term wealth and you have higher risk appetite, flexi cap is the way to go. And if you have moderate or moderate to high kind of risk appetite and you want risk adjusted, slightly less volatile degree of returns, then I would say multi-asset funds are funds that you should consider.
All right. Also, the PMS question that he's asked about PMS of Marcellus CCP and White Oak PMS.
Right.
He's been holding it from 18 months.
Right. So regarding Marcellus, year to the 2021, 21, 22 and 2023, all these 3 years, year on year, this fund had significantly, the Marcellus CCP and Rising Giants, two allocations that you have, both of these allocations have significantly underperformed the benchmark. Forget even the peer group. So we should know in what way do we evaluate our portfolio. There are 2-3 ways of doing it. One is performance compared to the benchmark. Second is performance compared to the peer group. So these funds have failed to beat the benchmark, the Marcellus variety, I think you can, and 3 years is a sizable period of time. You can probably look to invest. White Oak, you have, I'm not sure, they have 4 PMS strategies. Which one have you invested? But if you have stayed or invested only for 18 months, I would suggest wait for 3 years for, to get market performance across cycles, and then take a call for White Oak PMS.
All right, all the best, Girish, and hope that answers all your questions. I have one